So today, Caitlin Clark released a water bottle. Yes, I mean this, a Gatorade water bottle. I think it's going to be impossible to get because this is a water bottle. Not only did it sell out, it was obviously going to sell out. The damn site crashed. The website crashed. The literal website, which was basically there to try sell obviously Caitlin Clark's water bottle, the Gatorade website, crashed. And it wasn't some nothing website. It was fucking Gatorade. It was Gatorade. The site crashed. Like, virtual queue for a bottle of Gatorade. Like, if you guys don't know, like, it was literally like, it had a crash website. They literally had it like it was Nike sneakers.
Caitlin Clark recently received $50 million Gatorade deal, used a water bottle to crash a website, and was named the world's most powerful female athlete by Forbes. AJ Wilson had some ideas in the midst of all of it. The response was precisely what one might anticipate. Hold on tight. Please leave a remark below. Do you believe that AJ Wilson has good reason to be frustrated with Caitlin Clark's financial success? Or is this simply a situation where certain people disagree with what the market has to say?
Where this Gatorade water bottle was limited to 2,200. And you might be saying, okay, yeah, it's going to be really difficult to get. Which, duh. Anything Caitlin Clark limited to 2,000 is going to be really, really tough to get. Because, again, anything with Caitlin Clark's name on it is like gold dust. We do know that. We know that is something that is happening. And we know in general that like Caitlin Clark merch sells like crazy. And we know, everybody knows, the first batch of the Caitlin Clark shoes.
Before we discuss the reaction it caused, let's start with the Gatorade contract since it was the catalyst for everything else to happen and it merits its own time. $50 million, with Rainberry as its distinctive flavor at a website failure on the day of launch. A product that sold out before the majority of users had completed loading the page. For many years, Gatorade has been involved in athlete partnerships. It was consumed by Michael Jordan. It was consumed by LeBron James. Serena Williams took a sip of it. Not a single product launch damaged their website during the course of all those partnerships, decades, or big athletes they have ever collaborated with. The servers stopped attempting to meet demand once Caitlin Clark dropped Rainberry.
I've never seen anything like that before. A damn water bottle. A damn water bottle crashed the fucking site. Like, it's going to sell out in seconds. There are 2,200 Caitlin Clark fans that will spend $20 on anything that says the word Caitlin Clark on it. Like,
what truly distinguishes this agreement from a typical endorsement is the way it was structured. Instead of simply attaching Clark's name to an existing product or placing her image on pre-made packaging, the company resurrected a flavor she enjoyed as a child, developed a distinct identity around it, branded it with her influence, and launched it as a permanent product line stocked on shelves nationwide. That approach goes far beyond a short-term marketing campaign. It reflects a deliberate commercial investment. In retail, shelf space is earned through consistent performance, and products that fail to maintain strong sales are quickly removed. Rainberry eliminated any uncertainty immediately, selling out so rapidly that online systems struggled to handle the volume of orders, while sales velocity across thousands of stores confirmed the surge. When a product moves at that pace, the data signals that demand extends well beyond a dedicated sports audience. It reaches consumers who may not watch the WNBA or follow Clark online, but are drawn to the product in everyday shopping environments. Those broader buyers are what determine long-term commercial sustainability, proving that this is genuine crossover impact measured through real purchasing behavior rather than social media attention.
Like, even you got the likes of Nick Wright and stuff saying, they were like, well, nobody under the age of 35 in basketball is more popular than Caitlin Clark. And he's right. He's absolutely right. Like, I don't think anyone's really going to question that one. Like, under the age of 35, there is nobody, and I mean that when I say nobody, that is more popular than Caitlin. And that includes Wemby, that includes Luka Doncic.
The reported $50 million valuation places this agreement among the most lucrative endorsement packages ever secured by a female athlete across any sport. Yet the headline number is almost less important than what the structure of the partnership represents. When a global brand like Gatorade invests in a signature flavor that is not a limited edition, not a seasonal drop, but a permanent addition to its lineup, it signals a very clear belief about an athlete's long-term commercial potential. A permanent flavor reflects confidence in sustained demand, not a temporary spike in popularity, and the growth ceiling they are projecting for Clark is far beyond what most observers would have anticipated just 2 years ago. When this move is evaluated alongside the rest of her endorsement portfolio, the full scope becomes even more striking because viewing the Gatorade partnership alone does not fully capture the scale of her market presence, especially when it sits alongside a major deal with Nike. She also holds the largest endorsement contract in WNBA history, reportedly valued at $28 million across 8 years with Nike. In addition, she secured a partnership with State Farm, becoming the first female athlete the company has signed in its entire history, not just in basketball, but across all sports. Her agreement with Wilson Sporting Goods places her in extraordinarily rare company, as the brand had previously issued a signature line to only one athlete, Michael Jordan, before waiting decades to do so again until Clark. Now, with a $50 million commitment from Gatorade that includes her own permanent flavor, the scale of her commercial portfolio becomes even more remarkable. Any one of these 4 partnerships would typically dominate headlines on its own, yet she has assembled all of them simultaneously. All 4 of those agreements materializing within approximately a 2-year span creates a scenario without precedent in the history of women's sports. Nike, State Farm, Wilson Sporting Goods, and Gatorade all committing in rapid succession. These are not minor companies capitalizing on a fleeting social media surge. They are some of the most established and influential brands in American business, making substantial, long-term investments in the same athlete over a remarkably short period. When corporations of that magnitude align so quickly and decisively, they are not reacting to a temporary wave of popularity. They are strategically positioning themselves for sustained impact over the next decade. Forbes took notice of that momentum, and once Forbes assigns measurable value to an athlete's influence, the broader sports industry pays attention. The publication ranked Clark as the most powerful female athlete in the world and placed her 4th among the most powerful women in sports overall. The 3 individuals ranked ahead of her are executives who oversee major organizations, not competitors performing on the court, which means that among active athletes, Clark stands alone at the very top. In her rookie professional season, her off-court earnings alone reached $11.1 million, a figure no first-year WNBA player had ever approached before. Forbes evaluates far more than simple follower totals when calculating influence. It analyzes sponsorship valuation, engagement quality, conversion strength when brands activate campaigns, cross-industry reach beyond an athlete's primary sport, and overall economic impact on the league ecosystem. By each of those metrics, Clark delivers measurable results, and the supporting evidence is publicly visible. Arenas sold out. Television ratings surged to historic highs. Merchandise sales spiked, and even the Rainberry launch overwhelmed online demand. The numbers leave little room for interpretation. As for Aya Wilson, the reaction surrounding her comparison is a separate conversation, but it is important to begin by acknowledging that she is an outstanding basketball talent in her own right. A 2-time league MVP and a finals MVP, Aya Wilson is widely regarded as one of the premier talents in the WNBA and, by many objective basketball evaluations, arguably the most complete pure player in the league today. Her on-court excellence is not under debate. Her signature shoe collaboration with Wilson Sporting Goods, a distinction the company had not extended to another athlete since Michael Jordan, stands as a legitimate milestone that underscores her elite status. However, her public response to Clark's commercial surge has been steady and vocal, unfolding through interviews and social media commentary in ways that industry observers inevitably notice. At the heart of her frustration is the issue of recognition. She has openly suggested that Clark's level of endorsement attention and mainstream media visibility outweighs her basketball resume when compared to veterans like herself who possess longer track records and more individual honors. At its core, the argument suggests that basketball achievement should be the main factor determining commercial worth, and there is a certain fairness to that perspective. In an ideal system where endorsement value mirrored on-court production exactly, Aya Wilson would present a compelling case. She has dominated the WNBA for years, accumulated major awards, delivered elite statistics, and maintained remarkable consistency. However, the reality of professional sports economics has never operated solely on performance metrics. Market value has never been determined by skill alone. It is shaped by audience scale, cultural influence, mainstream visibility, crossover recognition beyond the sport's traditional fan base, and, ultimately, the ability to drive consumer behavior among people who might not otherwise engage with the league at all. Michael Jordan did not become the most commercially dominant athlete in history solely because of his basketball skill, even though his talent was undeniable. He reached that level because he combined elite performance with an intangible magnetism that drew in people who otherwise had no interest in the sport. Caitlin Clark appears to possess a similar pull. The Rainberry launch overwhelming demand, the historic partnership with State Farm as its first-ever female athlete signing, and the influence rankings published by Forbes all reinforce that conclusion. Markets do not operate on sentiment. They respond to measurable spending patterns, consumer engagement, and strategic corporate commitments. A clearer public acknowledgement of that distinction might have served Aya Wilson well, but instead she continued to highlight the commercial disparity in ways that fueled debate without necessarily strengthening her standing with sponsors, especially considering that brands monitor not just performance, but perception and positioning as well. Brands have entire teams dedicated to tracking exactly this type of behavior, and over the past 2 years the pattern has become clear enough that it no longer reads as isolated reactions. It reads as a posture. Public comments repeatedly referencing Clark, announcement timing that feels reactive rather than spontaneous, and an overall energy suggesting discomfort watching another player build a commercial empire without intervention all send signals. This is where the cost becomes concrete, not to Wilson's on-court legacy, which remains untouchable, but to her commercial potential. According to reports, brands observing the dynamic between Wilson and Clark have engaged in internal discussions about association risk. The question is straightforward. What perceptions will the public link to this athlete? And will those perceptions enhance or damage our brand in the eyes of consumers? Repeated public friction with the most commercially dominant player in women's sports is, by definition, not a partnership-friendly association.